Switching gears from sheep to markets now, and as 2019 planting continues, many are still wondering what will happen with some of what's left over from 2018 harvest. Trade issues have made moving the crop rather difficult, and on Tuesday, I was joined by Todd Hultman, a lead analyst for DTN in Omaha. We began our discussion by getting a trade update on where things currently stand with China.
As of this moment, and I'm speaking to you on Tuesday, so I do need to refer to that, trade talks with China have ceased. The last-ditch efforts on Friday ended with no agreement, and there are no scheduled or official trade talks set up as far as we know at the time being. There is talk that President Trump will meet with China's leader, possibly at the end of June at the G20 meeting in Japan. But for right now, those trade talks have stalled.
I read a new piece you've written for DTN called A Soybean Nightmare Revisited, and I encourage anyone who's watching to check that out if you haven't done so already. But in this article, you're saying if these trade issues don't get resolved, then we could see a new record high level of ending soybean stocks. And the USDA estimate is reflecting that too. Could you break that down for us?
Yes. So when I first started talking about the possibility of a bearish nightmare for soybeans, it was last winter when I was speaking to different farm groups around the country, and it became fairly evident that without China's full participation of export business, our ending supplies of soybeans were growing rapidly. And even at that time, they were looking at an ending stocks estimate of around 900 million bushels. Well, now on Friday, that got bumped up to 995, and really the export pace is not even justifying that yet. It may be over 1 billion bushels by the time we get to the end of this season. The hope that has been holding up soybean prices until about April was that a trade agreement would come through and perhaps China would start picking up their buying or even celebrate an agreement with some purchases that would help out this big surplus. But obviously things have gone sour on the trade talks, and so without that hope, this market is really in danger of collapsing even further than it has today.
Yeah, and also from that article, Todd, you say a strategy you might want to consider is a put option. Can you give us a reminder of what that is and why that might be something to think about with soybeans?
Yes, absolutely. And again, I'm sorry to say, but it was a much better strategy in the winter. But basically buying what I call an inexpensive put option is a way of buying disaster insurance when it comes to soybean prices. It allows you to set a bottom selling price where you can cap off your risk. So for instance, this winter, a person could have bought a November soybean 760 soybean put for roughly 4 cents a bushel. Now, the good news about buying a put option is your only risk is the price of the option. You can't lose any more than the 4 cents you pay. It caps your risk to the downside. And of course, 760 was not a great price to contemplate, but at least it gave us some kind of floor to look forward to shut off the pain.
And when it comes to that trade issue with China, what's the biggest thing you'll be tracking in the coming weeks and months?
Well, you know, the thing I've noticed, Troy, is that the real stickler point that keeps getting talked about is intellectual property rights. And as long as negotiations have been going on, there really has not been any significant concession mentioned on that point. And until we get some kind of movement or solution to that, it's hard to imagine that the rest of an agreement could come together. I really don't think there's much resistance on China's part as far as agreeing to buy more U.S. goods. That's somewhat in their self-interest, and they've expressed a willingness to do that in the past. But this intellectual property right sort of thing seems to be one of the main impediments to getting a deal done.
And I want to talk about the WASDE report for May that just came out. Corn looking rather bearish. Does it seem to you that trade uncertainty with Japan, Mexico, Canada, even China to a lesser extent, is that playing a role there?
Yes, I think the breakdown in talks with China definitely has a psychological impact on what we expect from the rest of the trade agreements. And as you mentioned, we've got negotiations going on with Japan right now, Japan and Mexico being two big U.S. customers of ag, corn included. And so when the China deal goes south, it makes you wonder, how well is the talks going to go with Japan? And that just adds to investors' concerns and just the bearish weight of prices that we're seeing.
And Todd, what about wheat? You think that's just a result of too much supply?
Well, yes, absolutely. And unfortunately, even though we've got the lowest planting in over 100 years for our winter wheat acres, we're still going to have plenty of wheat of U.S. supplies available, it looks like, because we're going to carry probably 1.1 billion bushels of old crop wheat into this new season. We're going to grow, at least the current production estimate is for less than 2 billion bushels. But the real tough hurdle for wheat is that around the world, so far, all the major wheat regions are doing well in terms of weather. Their crops look good, and USDA is projecting a 6% increase in world wheat production. So that's very tough to come up against.
And finally, as we let you go, Todd, any other risk management advice or marketing tips that you'd like to mention to us?
Well, stay close. A lot of the best planning really happens in the winter, and some of our best pricing opportunities happen in the winter. I would say one tip is that we like to watch seasonals a lot, and typically corn and soybeans both are coming near the time of year when they typically make their seasonal highs. Well, we understand that that's tough for soybeans to do in this fundamental atmosphere, but corn still has a chance. It may be a later seasonal high than normal, but there is still a chance of a better corn price this year because we've got so many planning difficulties that we're still facing.